Hey, whether you're headed for Johnny Cash's Jackson or the Fed's Jackson Hole this Friday, the message is the same. It's a pivotal moment, and the choices you make now can change your financial future. Stick with us. This is the Mortgage 101 podcast.
That's right, Manley. In the song Johnny Cash sang about headed back to Jackson, we've got the Fed headed back to Jackson now. The big question is, what's going to be talked about at Jackson Hole? Everyone's burning desire is wondering what the Fed is thinking. We're going to find out this Friday.
Hey, Anthony, but hasn't inflation cooled a little? Isn't the Fed finally on track for these cuts we're talking about?
I mean, not so fast, right? The PPI just jumped to 0.9%, almost 1% in 1 month. The annual inflation is still set at 3.3. Add in strong jobs data, the Fed's got a tough decision here. I mean, cuts may come, but they may not come as quickly as the market hopes. All will tell in this Friday's speech that Powell's about to have.
And that's why today we're tipping our hats to Johnny Cash while also tipping our hats to Powell at Jackson Hole. Both Jacksons are about to make huge, big decisions, and the buyers need to be ready for the fire either way. Let's bring it.
The whole world is acting like a Michael Jackson emoji eating popcorn. You know, when you see in the text comments, like that's what the world's doing right now with Jackson Hole.
And everyone wondering if it's going to cool off or going to keep burning.
At its peak at 9.3%, everyone's looking at him like, bro, did you just say that?
Yeah, y'all stayed in rhythm. I did not have to break out the whip this time.
I thought for a second you might, but we're good.
Hopefully you like all the education that you're getting from Manley and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
Welcome to the Mortgage 101 podcast with Anthony and Manley.
Hey, folks. Johnny Cash said, "We got married in a fever, hotter than a pepper sprout." Well, the housing market feels the same. Rates rising, inflation flaring, and everyone wondering if it's going to cool off or going to keep burning.
That's right, Manley. Today's episode 18 is all about making our way back to Jackson. We're drawing parallels here between the Fed's Jackson Hole meeting and Cash's Jackson, because both cases, the cards are on the table and it could flip the script on what's in the future.
Yeah, buddy. Hey, what we're covering today, what the Feds might reveal at Jackson Hole this Friday. That's number one. Inflation's fiery comeback and what it means for buyers. We got Gen Z's creative ways to play the game when rules feel stacked. We also have the ever-popular rate tracker, so we can see what we think rates are going to be versus reality. Hope somebody's checking our work. We'll also have Buzzwords. We're going to give you some mortgage terms. Ryan's going to yell at us the whole time for talking too much. It's going to be great. We have the big W for the buyer. You know, what we did this last week that's really positive for our business and for buyers. And our final word, how to walk confidently back to Jackson.
Let's strum our guitar, roll those dice, and let's talk about today's buyers on how they can have their own Jackson moment.
Love it.
This Friday, Jackson Hole meeting is like the showdown in the song. The Fed's walking in town, and everyone's watching, waiting for the call. Will they cut? Will they stall? Or do they let inflation burn a little longer?
And it's just like Johnny Cash, Jackson. There's an ego and fire in the air. The market's pricing 85% odds of the 25% rate cut. Some even whisper about a 50 basis point rate cut. But one strong job reports could shut that whole thing down.
Yeah, I mean, we can't bet our whole life, or the borrowers can't bet their life on what's going to happen in Jackson, right? They got to prepare for the outcome. It's uncertain because it is. Like you just talked about, we could, see a half a point basis cut, 50-point basis cut, which is massive. But it's probably going to be a 0.25%. I don't think we're going to see any stalling. If we see stalling, I think all ring around the fire is going to break loose, literally. I think Johnny Cash is going to break through, and the inner Johnny Cash of the market is going to show itself. They're done waiting. This ring of fire is getting hotter and hotter, and they're like, yo, y'all need to do something quick. This touting of rates higher for longer is done. They are done with it.
Yeah, I've talked about this once before. we're going to see the villagers go out with their freaking torches and try to burn something down. It's going to be bad. We got to come to a conclusion here and quit this Mexican standoff that's happening between Powell and the president, which isn't great. Not trying to get political with anybody, not trying to, discriminate against any population in the world, but there is something going on here that just feels like, two yellow taxi cabs that are saying, I'm going this way, you're going that way. So crazy.
Yeah. The whole world is acting like a Michael Jackson emoji eating popcorn. When you see in the text comments, like that's what the world's doing right now with Jackson Hole. They got their they got their popcorn and they're eating up because they're like, yo, what's going to happen? What are they going to actually start cutting these rates and doing it in a way that's going to make meaningful sense? Or are they just going to keep touting higher for longer? There are some people that even are saying that Powell may, this is his last hoorah. This is his last moment. He's no longer going to have a Jackson Hole podium. Maybe he advises he's resigning after this. Like,
oh, wow.
Like,
that could be crazy. That could be crazy. I don't know. There's a lot of pressure. It's a big pressure cooker for him, and he's got nothing to lose right now. These guys are butting heads. I hate to say it, but it's problematic, and we're all paying for it. It's the bad part. The general public, we're paying for it.
Yeah. If we want to do a visual, here's a totem pole. We're at the very bottom. So,
for sure.
Yeah, the consumer's at the bottom, right? The central bank's at the top, the market's in the middle, the consumer is at the bottom, unfortunately. But right now, there's some termite damage, and that totem pole may fall over, and there may be some different alignments coming in the future. So time will only tell.
Yeah, we're just gonna have to see what happens. But hey, we're in inflation's fever right now. We got to figure out what's going to happen with that. PPI spiked 0.09 in July, the hottest it's been since 2021. We got this. The wholesale's not the consumer, and wholesale leads CPI, so the pressure flows downstream. The solution is guide the buyers to act now because it may stall.
Yeah, I mean, to bring Cash in this, Cash saying about going back to Jackson, to mess around. But inflation isn't messing around. It's dictating the Fed's hand. The fever isn't broken yet. In my opinion, there still needs to be some groundwork laid. And hopefully this Friday, that groundwork is clear as water and not muddy as mud.
Yeah, you're right. That fever has not broken. But let's see if we can get that to happen. Strategy is greater than speculation, folks. Don't wait on a promise of tomorrow. Work with the fire in front of you. That's all we can say. If you guys are liking all the information you're getting from us, if you're feeling that we're educating you, please smash that like button, subscribe, DM us with any thoughts or ideas for our show, and also tell your friends and family about it. Share us on social if you can. Would love it. We're into the next section, which is Gen Z hacks, the new playbook. While older buyers wait for perfection, Gen Z is charging back into Jackson with hacks and hustle.
Yeah, I mean, you look at Gen Z, the facts are in the math. Over 20% of their deals are co-buyers, friends, siblings, parents. House hacking is mainstream. First homes aren't forever homes. They're launch pads. A lot of people don't understand what house hacking is. House hacking is getting creative to get into the house. The model of having your 20% down and being yourself and being reliant on yourself only, you have to be creative in this market. You need co-signers, non-occupying co-signers. You need gifts. You need to leverage 401k. You need to leverage mom and dad. You need to leverage an uncle going on as a co-signer. These are things that you have to think outside of the box in order to create paths in this type of market. And Gen Z gets it. They are writing the prescription. They are doing a masterclass every day. When I have clients come to me and they are not Gen Z, they come to me and go, well, I don't know if I can afford it on paper. When I get a Gen Z, they're like, well, I know I couldn't afford it on paper, so I'm bringing in, Aunt Pam.
Uncle Larry's coming.
Well, in this case, they're bringing Uncle Johnny Cash. They're bringing Johnny Cash for the cash, because at the end of the day, Gen Z is 2 steps ahead. This whole time, myself, being in my 40s, I always thought those young whippersnappers.
Let's not
don't
bring
know what
age
they're
into
doing.
this. Let's not bring age into this.
Those young whippersnappers don't know what they're doing, right?
We don't
They
want to
don't
lose
know
half
what
of
we
our
went
market
through.
right now.
We had to lock a loan in snow both ways uphill.
Yeah.
They don't know what it's like for home ownership back in the days. But in reality, the market's changed, technology's enhanced, and opportunities have changed as well. So kudos to the Gen Zers.
The takeaway from these Gen Zs is they're not waiting for the market to sing the perfect tune. They're writing down their own verse, and they're making it happen. Ring of fire, baby. Bring it. All right, folks, it's the ever-popular Rate Tracker. This is where we talk about the forecast of what we think the rates are going to be at the end of the year. We've been talking about it every month, so we're going to show you what's happened since January now to August, and our average year-to-date is like 6.71%. And that's not the Ballard we were hoping for. Kind of ticked up a smidge from last week even, just because there's all this hoopla about the big Fed meeting on Friday in Jackson Hole, which is where we're getting this whole theme from this great podcast we're doing. And hey, tell me what you think, Anthony.
Yeah, Manley. I mean, it means that if we're headed back to Jackson, lock strong, budget safe, and expect volatility and uncertainty. And you and I have always stated that when the market senses or they see volatility or uncertainty, they're going to price on the defense. And so markets are like waves. You know, it goes in, it goes out. It goes in, it goes out. 2 steps forward, 1 step back. And the one thing that the listener needs to understand is when you hear the Feds talk about what they're going to do, that's when you have to react. When the Feds actually do what they're going to do, it's too late. The Feds have 2 positions, what they say they're going to do and what they actually do. The market follows what the Fed talks about and then cleans up based off of what the Fed actually does. So if the Feds talk about lowering rates, what do you think the market's going to do? They're going to be like, oh my God, rates are lowered. And then we see 2 steps forward. But then when the Feds go in the office and they meet up, and then they're like, I want to be a little cautious.
Well,
you
let's hold on
slide
a
back.
minute. Let's hold on a
Yes.
minute. Oh.
Hold on a minute. You know, rates got to be higher for longer, what Powell always says. Or my favorite part,
Oh my gosh.
2 years ago when he was like, inflation's going to be transitory, when it was, at its peak at 9.3%. Everyone's looking at him like, bro, did you just say that? At the end of the day, there's going to be some change, but the volatility, that train is now coming back into station. And people are now going, wait a minute here. Things need to change. And we're starting to see it. We're starting to see the cracks.
I can hear the whistle blowing, buddy. I can hear the whistle blowing.
Yeah, so let's start in January. January we saw 6.15 to 6.65. Inflation was sticky. It was a hot start, right, going out the bat for 2025 year. Starting in February, 6.15 was still our mantra, but we were landing in at 6.73. So the CPI eased slightly, and we saw an uptick in February. March, again, we're still, our whole thing is we're going to see 6.15 by the end of the year. March comes, we see it tick up slightly at 6.81. Strong jobs report. It cut the hope of, hey, wait a minute, one person's income is another person's spending, and if people stop spending, the income goes away. So when we see jobs are strong, that means people are spending. Come into April, we tick down 6.74. The Fed paused. Inflation surprise. Oh, what's going on here? Then come May, we were at 6.68. Again, downward trend. Jobs were slowing. Optimism is up. A lot more runway to see. Come June, 6.64. Down again. CPI was moderate. Come July, ticked up a small amount, 6.71%. That's the NFP revisions. That's the shocked market, because what they do, they cash a check that they can't really write in the first place, and then they make revisions. Oh, here's the jobs. Boy, let's revise that. It was really this, which completely changes the market trajectory. Go to August, we were up to 6.93 because of the PPI spike. And there's a lot of, there's a lot of tension right now with the Jackson Hole. What Powell states this Friday is going to set the tone. And if the Fed's tone is going to be the continue of rates higher for longer, that's going to be the straw that breaks the camel's back, in my opinion.
Yeah.
I think that's when we're going to see a whole slew of ugliness in the market. If they tout that rates need to go lower, I think September is going to be beautiful. I think next month's rate tracker, we're going to start seeing massive downward pressure.
Hey guys, I just want to point something out that when Anthony's talking about it, or I'm talking about it, we're talking about this 6.15 versus the 6.93. We're talking about 6.15 being our prediction at the end of the year and 6.93 being what's actually happening right now. So that's what we're tracking, the movement up and down, just so you guys can track along with us. I know it's confusing, a lot of information. We're probably getting in high level here for some folks, but we're trying to let you know that we're tracking what's happening with these rates, and we're going to see what comes along. And Anthony is 100% right. If Jackson Hole doesn't bring relief in September, it could be more heat for everybody. It's got to cool down, So give me the bottom line, Anthony.
Yeah, bottom line is strategy, right? Don't sit around waiting for the song to change. Lock your verse, refi the melody once it softens later. But if prices jump, you can't rewind the record. It's already playing. It's already played out. We are past analog. We're digital nowadays. So, at the end of the day, you're right. This rate tracker is for a reason. We want to see where we started the beginning of this year in January and systematically see how the rates are trending. Are they trending up? Are they trending down? Are they sticky? We can honestly say that they're trending down, and they're going to continue to trend down, which gives you a glimpse into the future, which tells you, hey, maybe I should get off the sidelines and not be one of the 5.5 million people currently on the sidelines waiting to see a 5 in front of that rate.
We're just trying to point out the reasons why it's trending up or down at the time too. What political pressure, what market pressure is creating this up and down. So again, we just hope you're getting something helpful out of this, and that you're really enjoying what we're putting down here. We're all ears. We'd love to see you ask us for some questions or some feedback to say we'd like to hear something about this topic. So please jump in anytime. With that, we're going to jump into the rapid fire buzzwords with our main man, Ryan, our producer, who's here with us today. Ryan, what do you got?
Okay, boys. 5 terms, short answers. If you ramble, I'm sending you back to Jackson.
All right.
Yes, sir.
Here we go.
All right.
Be good, Anthony.
Yeah. All right. Term number 1 today is PPI.
Okay, man, that's the opening verse of inflation, right? That's how we track how inflation is doing, and if it's going to be sticky and then remain, elevated, or if we're going to start seeing inflation come back down. The Feds want to get at 2%. That's their Fed rate. That's their inflation rate. Remember, the Fed rate is not the mortgage rate, but inflation has a direct correlation to where that goes. And if inflation is sticky, it's giving them pause because they don't want to have bounce back, right? They don't want to all of a sudden drop the rates and then it bounces back and skyrockets higher and they got a bigger issue to deal with. But we're beyond that. I think you and I, Manley, can agree that this ain't 1980s. We're not going to see bounce back. The PPI, it's an indicator of where this economy is going and the buying power with it.
All right. Nice and concise, I guess. All right. Number 2.
Rambling man. Oh, that's not Johnny Cash.
No. Number 2 is soft landing.
Hey, that's the Fed's fantasy duet. Rarely hits the high notes. Basically, the Feds have been trying to come up with this soft landing that I don't think they're ever really going to hit. We're going to have an impact at some point, and that's why they're saying higher for longer, trying to limit the big turn down, and it's real. Like we've talked about it before in other podcasts, that if we see rates with a 5 handle on it, 5.99, 6% or less, we're going to add another 5 million, qualified buyers into this market. And the impact that's going to have across the board is going to be pretty dramatic. So, and the appreciation that's going to jump up, that's where everybody's going to panic and go, oh gosh, we're in trouble. Appreciation's going through the roof. Inflation's going through the roof. What's happening? We're turning for a crash. Well, we're not ever going to get there. But again, that's what the soft landing's about. They're trying to figure it out. I don't know how they're ever going to get it, but keep working at it. But please lower the rates. Moving on.
All right. Number 3 is something that actually a lot of my friends are doing, so I'm pretty familiar with this, but that is house hacking.
Absolutely. That's Gen Z's guitar riff to cover the mortgage with rent, right? So Gen Z understands that house hacking is, hey, I'm going to buy a house and then I'll rent out rooms. I just had an electrician buy a house knowing dang well that he's going to rent out the other 3 rooms to his buddy for $1,000 each, and his mortgage is $3,000. So he's effectively living for free while those other Gen Zers are paying down his rent, and he's gaining all the equity. He's paying the principal down. He gets the tax incentives, and he's got a little cash flow because he's making a little bit more. So he's living for free. That is the definition of a house hack.
Yep. Number 4 today is rate lock.
Woo-hoo-hoo. This is where your cowboy hat in a storm. You'll be glad you wore it, baby, because we don't know what's going to happen. We've had this happen before. If they cut rates, we've seen rates kind of squeak up really quick. So lock if you got them. Lock if you got them. So everybody's bracing. Be ahead of the curve. If it goes back down, we've talked about this before. We have a great float down feature. If we move 0.3% while you're before you close, we're going to move that thing down for you at no cost to you. So lock the loans.
All right. Our final term for the day is non-QM.
Non-QM, loans for the self-employed outlaw. No cookie cutter required. Non-QM used to be a bad word. You know, like if a lender said non-QM out loud, we would say, go to the corner now. Go to the corner. Now we're saying like go to the corner to get some champagne so we can pop some bottles because non-QM is like it is the new age of lending. It's no longer B or C or D tiered. It is A plus tiered. In fact, sometimes non-QM, and let me get back to what non-QM means, it is a non-conforming loan. You have conforming and non-conforming. I'm not doing a Macarena, I promise. So non-conforming, they don't conform to the guidelines, meaning the central bank. The conforming does. What are conforming? FHA, VA, conventional, Fannie Mae, Freddie Mac. We conform to the guidelines that they set forth. We package it up, sell it to the market. Non-conforming does not do that. It's portfolio lending. It stays with the bank that gives it to you. So they can do whatever they want, aka Wild West, aka Ring of Fire, aka Johnny Cash. He's making his way back to Jackson. Now banks are making their way back to profitability with non-QM because they realize that self-employed buyers are not the bad guys. The conditions and the overlays are the bad guys. So that's where non-QM comes in because they don't have to worry about the overlays of the central bank. There are none.
Yeah, y'all stayed in rhythm. I did not have to break out the whip this time.
I thought for a second you might, but we're good.
Hopefully you like all the education that you're getting from Manley and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
All right, guys, we're at the big W win for the buyers this week. Talking about big things that happened for buyers that were really great to our market and specifically to our buyers and made us feel good about why we're in this industry. So, Anthony, I'll let you jump in first.
Yeah, I mean, so my big win was I had a client come in and she came to me and said, Anthony, unfortunately, my landlord is selling the house and I don't think I can afford it on paper, but I can because I'm tipped. And so, you know, she works on the west side on the island of Kauai. And so, you know, she makes a lot more money on paper. And, you know, one of her friends from the restaurant said, you need to call Valentino. There is no in his dialect. And so she called me and she's like, I don't know, they are going to offer it to me, but I make a certain amount. So the good news is I expanded her horizon and her mindset. And I said, listen, how long have you been with them? She's like, well, I've been with them for 9 years. I'm like, okay. And then you're a hostess? She goes, I'm a hostess, server, and manager. I was like, great. So are you hourly right now? Are you salary? She goes, well, I'm hourly and I'm tipped. I'm like, great. Do you think they'll ever make you a salary position if you ask? And they go, well, I don't know. I'm like, yeah, because if you ask for a raise of $3 an hour and you go into your manager's office and say, I need to be on salary since I do managerial duties and I need a $3 an hour raise and I will do whatever I need to do to make you feel like I deserve that. And she walked out of that office with a $5 raise with salary. So guess what? We no longer have to average. Now that she's guaranteed, she just got that $5 an hour raise. She now is approved. So she went from I can't to I can, all because of the mindset. That's a big win.
Love it. Love it. Hey, buddy, that's our own Jackson Victory March because we're ready for the fire to spread, baby. That is a great story. Love it. All right. Hey, we're going to go into our final thoughts, you guys. Cash and Carter sang about heading back to Jackson to face the fire. The Feds heads there on Friday to face theirs. Buyers, your Jackson is today's market.
Yeah, I mean, don't rent by default. Don't wait for perfect. Get your strategy, look ahead confidently, and find your way back to Jackson. Because if you don't, I guarantee many are, and they're doing it right now.
Yeah, baby. Hey, folks, thanks for listening to the Mortgage 101 podcast with Anthony and Manley. We appreciate the support. Hope this helps. Please hit the like button. Hey, subscribe. And if you have any comments, we would love and welcome them. Please reach out. If this episode helped you feel more confident about your home buying journey, do us a favor. Share it with a friend, subscribe, leave a review, and if you've got a question or a topic you want us to cover, hit us up with a DM or a comment. Thanks for listening to the Mortgage 101 podcast. We'll see you next time.
Hey, Manley.
Wait, I'm getting ready to go to the Jackson Hole Rodeo. What do you need?
Knock, knock.
Oh my gosh, I thought we weren't doing this anymore, Anthony.
Knock, knock.
Who's there?
Jackson.
Where I'm going, Jackson who?
Jackson your chance, because Friday, pals in Jackson, and you should be too. Just in your own market.
Love it. Love it.